Hey, soldiers, as I have often said, the federal government will not allow crypto to flourish. It's not going to happen. They're going to stand in the way of cryptocurrencies, independent cryptocurrencies, making any headway, any real headway in our society because the government wants to own the money. This is very simple. And I have proof of that. Okay. I'm not just talking out of the side of my head. A lot of people may say, well, Tyrone, you just don't like crypto and this is just piling on. Absolutely not. For, I guess, since the Song Dynasty back in ancient China. Now, the Song Dynasty went all the way back to the year 960. Okay. That was the first time that human society, had seen paper currency. And it also kind of solidified the idea that governments were going to control the money, okay, the currency. And today is absolutely no different. The Biden administration has initiated a full court press against crypto. And we're seeing it with other aspects of the society that the government doesn't like. For example, the Second Amendment. Okay, it is no secret that the left does not really agree with citizens being able to protect themselves and to be able to, because let's be honest, the Second Amendment, what it's actually all about is being able to resist tyranny, right? All kinds of tyranny from your government, tyranny from someone who might want to kick your door down and steal your television. All right. So the left in this country and around the world, they do not believe in that concept. And with regard to the Second Amendment, I'm going to be quite honest with you. As a black man in America, I understand that there was a time when people who looked like me were not able to own firearms. And that coincided with a period in our history where people were subjugated, okay, back in slavery and in Jim Crow. And if you think that type of subjugation is confined to race, or I hate to use that word because there's biologically one race of humans that we know of, that's Homo sapiens sapien. But if you think that subjugation is confined to just one ethnicity, then you're wrong. Because you can look around the world and see other regimes where people are prohibited from owning firearms. You can kind of get a feel for how they are treated. Look what happened in Australia. Okay, they taken away their weapons a long time ago, years ago. Okay, a few years ago. And you know what happened in 2020. So anyway, we see these types of attacks on anything the government doesn't want you doing. We see an attack coming from a commerce vector. They are locking you out of banking. Okay. Wells Fargo is in the process of trying to stop certain transactions from occurring if it involves people who own firearms manufacturing. All right. Same thing with marijuana at the federal level, although that may be changing because the government needs tax money. What began as a trickle is now a flood. The U.S. government is using the banking sector to organize a sophisticated, widespread crackdown against the crypto industry. And I know a lot of people are wondering, well, why would they do this? Well, there are certain players within the government who would love to see the creation and adoption of a central bank digital currency because it's going to give them the ability to tax everything under the sun. Biden's already said that he's going to tax tips. Okay. So you got a waitress or a waiter. They're out there trying to make ends meet. They're getting a couple of dollars, for servicing the table or what have you, or serving a drink. And, I've seen this at Dunkin' Donuts. They have a little tip jar and you can put cash in it. Well, he's saying, you know what, we're going to tax that. And if you had a CBDC, or a central bank digital currency, taken to its furthest extent, all the transactions would be recorded. So even if you wanted to give someone a tip, it would be recorded in a ledger that is held by the Treasury and probably the Federal Reserve Bank. And so you don't taxes on that. You already see it happening with their edicts around the applications like Cash App and Zelle and things like that. You're supposed to now report over a certain amount of money. So every little girl in America that has a lemonade stand, guess what? Sweetheart, you're about to be taxed. So the U.S. government is using the banking sector to organize a sophisticated, widespread crackdown against the crypto industry, and the administration's efforts are no secret. They're expressed plainly in memos, regulatory guidance, and blog posts. However, the breadth of this plan, spanning virtually every financial regulator, as well as its highly coordinated nature, has even the most steely-eyed crypto veterans nervous that the crypto business might end up completely unbanked. Stablecoins may be stranded and unable to manage flows in and out of crypto, and exchanges might be shut off from the banking system entirely. Now, Nick Carter over at Pirate Wires has done some really fantastic delving into this particular subject. For crypto firms, obtaining access to onshore banking systems has always been a challenge. Even today, crypto startups struggle mightily to get banks, and only a handful of boutiques will serve them. This is why stable coins like Tether found popularity early on to facilitate fiat settlement, or in our cases here in America, most likely the dollar, where the rails of traditional banking were unavailable. However, in recent weeks, the intensity of efforts to ring-fence the entire crypto space and isolate it from traditional banking systems have ratcheted up significantly. And they really have. In the last month, this thing has gotten to be like, really, a epidemic of government regulation targeting crypto and the banking relationships that these companies have. Specifically, the Biden administration is now executing what appears to be a coordinated plan that spans multiple agencies to discourage banks from dealing with crypto firms. It applies to both traditional banks who would serve crypto clients and crypto first firms aiming to get bank charters. It includes the administration itself, so the Biden administration, influential members of Congress, the Fed, the FDIC. Now listen, the Fed, they've got a vested interest in establishing the CBDC, or the central bank digital currency. So that's the angle that they're coming from. And they wield a lot of power. It's nothing for Jerome Powell to be able to get a meeting with several congressmen or senators and to be able to say, hey, this is the direction we want to go on this, but we need to clear the field of these independent cryptos before we can establish this. I've long thought that the whole crypto space was just a conditioning mechanism to get folk, kind of ease them into the government version, which is its CBDC. Now, I'm going to recount to you several events that have happened very recently concerning banks and the policy of trying to curtail crypto. Okay, these are recent events. On December 6th, Senators Elizabeth Warren, John Kennedy, and Roger Marshall sent a letter to crypto-friendly bank Silvergate, scolding them for providing services to FTX and Alameda Research, and lambasting them for failing to report suspicious activities associated with those clients. Okay? On December 7th, Signature, among the most active banks serving crypto clients, announced it intends to cut deposits in half ascribed to crypto clients. So they're going to pare down that piece of their business. In other words, they'll give customers their money back, then shut down their accounts, drawing its crypto deposits down from 23 billion at peak to 10 billion, and to exit its stablecoin business. That's huge. So they're basically going to put $10 billion back into the pockets of people. And these people, these organizations are not going to be able to have a banking relationship for those funds. Not here in America, at least. On January 3rd, the Fed, the Federal Reserve Bank, the FDIC, and the OCC, the Office of the Comptroller of the Currency, they released a joint statement on the risk to banks engaging with crypto, not explicitly banning banks' ability to hold crypto or deal with crypto clients, but strongly discouraging them from doing so on a, quote, safety and soundness, unquote, basis. Now, The Office of the Comptroller of the Currency being involved in this is very important because I go back to the reporting we did on Saul Amrova. She was a nominee. She was the nominee to be the comptroller of the currency. She would have headed up this OCC office. And her writing and speeches around the establishment of a central bank digital currency were frightening. All right. She basically even went so far as to suggest you could control inflation simply by throttling or restricting private access to funds. So you might have a balance in your checking account of $5,000, but under her plan, one of her plans, she'd restrict that back to maybe $2,500 so that you couldn't put as much potential money into the system, thereby slowing inflation. Now, why would she do that? Because it would allow the Fed to then not have to raise interest rates, and that would benefit corporate America. It would also benefit the United States of America, because remember, as that interest rate goes up, that means that's the more money we have to pay on the national debt. So you'd get hit as a little guy, but corporations and the government, they basically get a pass. Okay, so the Office of the Comptroller of Currency is important in this equation. On the 9th of January, this is just 6 days later, Metropolitan Commercial Bank, this is one of the few banks that serve crypto clients, announced a total shutdown of its crypto asset-related business. Again, on January 9th, Silvergate stock fell to $11.55 on bank run and insolvency fears, having traded as high as $160 in March of 2022. Now, remember, we're seeing FTX fall out. We're seeing Binance have difficulties. So this is all pressure, and people are losing faith rapidly. On January 21st, Binance announced that due to the policy at signature, they will only process user fiat transactions worth more than $100,000. Now think about how restrictive that is. How many of these retail investors have that kind of money to make a minimum? All right, guys, strap in. We got more to go. January 27th, the Federal Reserve denied crypto bank Custodia's 2-year application to become a member of the Federal Reserve System, citing safety and soundness risk. Also on January 27th, the Kansas City Fed branch denied Custodia's application for a master account, which would have given it the ability to use wholesale payment services and to hold reserves with the Fed directly. January 27th was an active day because also on that day, the Fed issued a policy statement which discouraged banks from holding crypto assets or issuing stable coins. And it broadened their authority, the Fed's authority, to cover non-FDIC insured state chartered banks, a reaction to Wyoming's special purpose depository institutions. Finally, on January 27th, they close it out, that day at least, the National Economic Council released a policy statement, not explicitly banning banks from serving crypto clients, but strongly discouraging banks from transacting with crypto assets directly or maintaining exposure to crypto depositors. February 2nd, okay, now we're just a week or so ago, the DOJ's fraud unit announced an investigation into Silvergate over their dealings with FTX and Alameda. February 6th, Binance suspended USD bank transfers. We did that report. And finally, as of February 8th, companies Protego and Paxos, they had applications to follow Anchorage and obtain full approval to become national trust banks. Now, those applications are still outstanding. They're way past the 18-month deadline, and they probably will not be accepted. They'll probably be denied by the Office of the Comptroller of the Currency. So that's what's happening, guys. Okay. Banks are taking deposits from crypto clients, issuing stable coins, engaging in crypto custody, or seeking to hold crypto as a principal have faced nothing short of an onslaught of regulators in recent weeks. Now, we talked about the Fed, the OCC, the FDIC, states. Okay, it's a full court press. And if you think this is not coordinated to really hamper the ability of crypto to gain a real foothold, then you're deluding yourself. Okay, ask yourself this question: How many places will accept Bitcoin in trade? Will your grocery store do it? And not just Bitcoin. I don't want to pick on them, but any crypto. Okay. Will your grocery store accept it? Okay. Will your gas station accept it? When your child needs, a book for school, will the bookstore accept it? On and on and on and on. All right. So not only is the utility has always been in question, and the answer to that has been, well, it's fledgling. It'll happen. But now, will it, with this kind of attack from the federal government? All right, so check out this report, because Sam Bankman-Fried, this guy, man, he's like the catalyst for all of this recent activity because of the FTX debacle. Now, some say that he was, this whole thing with him and Caroline Ellison was engineered. We've done a lot of reporting on that. Check out this report that we did recently that talks about the legal setbacks that he has faced. All right. This guy doesn't think he's going to prison, but it's becoming more and more likely that he probably will be. And here's some of the reasons why. He's had a lot of setbacks of a legal nature in recent weeks. Guys, I'll talk to you soon.